Our today's video is about MTNs and MTN programs. This is after Safaricom, the largest telco in East and Central Africa, have issued a 15 billion first tranche green notes in the domestic market out of the 40 billion that has been approved by the Capital Markets Authority. What is an MTN? MTNs are medium-term notes. Medium term in investing is a period ranging between 2 years and about 5 years. But practically in issuance of medium term notes, that period can vary to 10 years and the approved period can stretch to 30 years. A note is a debt security or paper that is issued by corporates or companies intending to obtain debt funding or borrow from the market. It gives companies flexibility in their sources of funding and a diversity in capital. Green notes are debt securities that are issued targeting to fund environmentally sustainable projects. And as provided for in the tax law, such borrowed capital targeting to fund environmentally sustainable project is exempted from taxation. And therefore, green notes are issued tax-free or tax-exempt, just like infrastructure bonds. When does an MTN, a medium-term note issuance, become a program? Through the process of approval by the Capital Markets Authority, and with an objective of ensuring that companies do not source debt capital, which is expensive, and have it idling in their bank account, CMA approves the total amounts that is supposed to be collected or received from the issuance of debt securities over a given period of time that in most cases does not exceed 30 years. Then the issuing company decides how much they would want to obtain as debt capital from the market, depending on the funding requirement of the projects to be executed. And for that reason, their total that is approved for issuance will be divided into portions that we call tranches, and they are issued to fund projects on a need basis. And therefore, such notes can be issued in 2 phases or tranches, can be 3 phases or tranches, and that continuous issuance is what becomes a program. A good example is Safaricom having been approved to issue debt securities, in this case, the green notes, targeting a total of 40 billion. It is supposed to be obtained in tranches where the first tranche has already been issued and targets to receive 15 billion Kenya shillings with a green shoe option of 5 billion. What is a green shoe option? A green shoe option is available or allows the issuer to absorb the oversubscribed option or notes up to a specified limit. This means that for the 15 billion Kenya shillings that Safaricom is seeking to obtain or to borrow from the domestic market, in the event or in case these notes are oversubscribed, Safaricom will have the option of accepting extra 5 billion Kenya shillings worth of the subscribed notes to make the total 20 billion. And therefore, a green shoe option targets to absorb oversubscribed notes in an issued tranche. After 3 seconds short break, we shall be looking at the specific details of the Safaricom's Green Note MTN program that is on issue. See you after 3 seconds short break. Welcome back to a detailed review of the Safaricom's 40 billion Green Note program. Through the use of this schedule, the name of the program is a DMTN program. This is a domestic medium-term note program, meaning that this issuance is restricted only to Kenyan jurisdiction. This paper is not available, or these green notes are not available for subscriptions by investors outside Kenyan jurisdiction. A medium-term note, as we had highlighted earlier in the first part of the video, this is a debt security that seeks to borrow for a term of between 2 to 5 years. And in particular for Safaricom's DMTN program, these 15 billion targeted through the issuance of the green notes will mature in a period of 5 years. To be a program, this we are getting it from the 40 billion green note issuance that has been approved by the CMA, and Safaricom as the issuing company is issuing the debt securities to obtain the 40 billion over the approved period of time in pieces or portions which we call tranches. And in the first tranche, Safaricom has issued debt securities to borrow 15 billion Kenya shillings, and with a green shoe option of 5 billion. I will be looking at that as we proceed with the other details in the schedule. The target total amount for this program shall be 40 billion Kenya shillings. And the first tranche, this tranche is seeking 15 billion Kenya shillings out of the total of 40 billion. The approved total of 40 billion cannot be exceeded, and therefore, for the green shoe option, which we highlighted that this is what shall be absorbed by the issuing company Safaricom in case this issuance received an oversubscription. If, for example, subscriptions are received for a total of, let's say, 22 billion Kenya shillings, they will accept a total of 20 billion Kenya shillings in that case, which means that they shall reject and refund back what shall be in excess, and that stands at 2 billion Kenya shillings. Credit rating. All debt securities are rated professionally. And the rating is very important for investors because it's what determines whether the debt security that has been issued is suitable for investment option or is a junk paper. And for that reason, the rating also does affect the fixed rate of return for the paper, because the riskier the debt security on issue, the higher the return. So when this paper has been rated as an investment rated option or security, it means there is lower risk, or the risk associated with this issue are suitable or fit an investment. And for that reason, this paper has given us a fixed return on investment or interest rate of 10.4%, which is net of tax. The bond is tax exempted. And why is it exempted? The funding under the Kenyan tax laws, Cap 470, any expense incurred by a company for activities that go to improve or protect the environment, those are allowable expenses for tax purpose. Similarly, funding or capital obtained through borrowing to fund environmentally sustainable projects. Such projects or such funding, the incomes generating from those funding to investors are exempted from taxes. And that is the reason why this green bond is tax exempt. Remember a while ago, EBL issued their own notes, and the return from those papers were not tax exempted. They were at gross. The return was inclusive of taxes. Such debt securities that are issued for projects that promote environmental sustainability, such securities are the ones that are called green bonds or green debt securities. And in this class, these are green notes. At this point, it's good that we recognize the fact that debt securities are borrowing instruments. These are options available for companies for borrowing from the market. And therefore, there are three available type of debt securities for companies or corporation, and those are commercial papers for short-term borrowings. And we have notes for medium-term borrowing, and we have corporate bonds for medium to long-term borrowing. and therefore precisely to say that a note is a type of a bond in debt financing for corporation or companies. The type of investment that you are getting from this kind of from these green note investment, these will come with environmental impact investing, because investing is not just about the return on investment. There is more to investing. It's about the impact. It's about ethical investing. And therefore, in this case, this is an investment that not only is going to give you a return at 10.4% net of tax, but also it's an investment where you are going to positively impact on the environment through the Safaricom's green projects. The purpose of these funding, or the purpose of the borrowed capital by Safaricom, will be to fund green infrastructure projects both within Kenya and in their newfound market in Ethiopia. The minimum amount that you would be required to invest in these green notes is 50,000 Kenya shillings, just as we have done in bonds, and the incremental aggregate amounts will be in multiples of 10,000 as the top-ups. The tax element, it's a tax-free green bond, as we have looked at. The maturity period is 5 years, and the offer period, or what would otherwise be the bidding period, you're allowed to bid or subscribe for this bond from 25th November all the way to 5th December. But the good side of this program or tranche issuance of notes is that if you don't meet the requirements for you to invest in this paper, and you would want to invest in the following or in the coming tranche, the second tranche, you can get ready on time with whatever requirements that you have not yet met. And for many investors, they do not have the CDS accounts. What many have is the DAO CSD account. The DAO CSD account is strictly for investment in treasury papers, both in the primary and the secondary market, while any other investment in listed companies, their equities, and also corporate papers, you are supposed to have a different set of account, which is the CDSC account, and you can easily create that account through your broker or through your bank. The maturity period, we have indicated 5 years. There are 3 ways on how to subscribe for these bonds if you are going to invest in it. We have been given the USSD option, where you are going to key in *483*810#. Then you proceed with the prompt that you'll be getting, fill in all the details that are required, and the option of payment, the system will send a push message, the STK push message for M-Pesa. You put in your M-Pesa PIN, and you will have paid, or you will have subscribed for the specific face value that you want to invest. The second option is through the Safaricom online portal or website. And the third one is by getting a serialized application form, either from the website or from the Safaricom placing agents. The placing agents, we have Stanbic Bank, we have a Standard Chartered Bank, and we have Dyer and Blair Investment Bank. An investment of 100,000 in the Safaricom's DMTN green note will give you a total return of 10,400 net of taxes, because the bond is free of tax, and that will be paid in June and December each year for the 5 years horizon. These papers can also be used as part of your laddering portfolio. If the 10.4% is within your acceptable rate of return, then this is a paper that will pay you in the month of June and the month of December, and to be precise, 11th of each of those 2 months. 1 million Kenya shillings invested in this paper will pay you a total of 104,000 each year of the 5 years horizon, and therefore it means you'll be getting 52,000 in the month of June and the month of December for the 5 year of the investment period. Thank you for watching, and see you in our next video.